Hey everybody, this is Ms. Morgan, and I'm just going to give you an overview about the statement of cash flows. Chapter 16 teaches you how to create a statement of cash flows, which is our fourth financial statement. So we have the income statement, the statement of stockholders' equity, the balance sheet, and now we have the cash flow statement. That's the fourth and final financial statement that you have to learn. The pages in the chapter that you are responsible for reading and learning for the test is page 726 through page 739. The first thing I want you to do is turn to page 739 so you're actually looking at a cash flow statement. This is the end result of what we're going to create, and we're going to create one of these next week in class. But the first thing I want you to see is that the statement of cash flows is created for the year ended. And so it covers a whole year's worth of information. The very first thing I want you to look at on the actual statement is the answer, which is at the bottom of this cash flow statement. And I'm going to go ahead and write the answer up here on this. I'm not going to use numbers for this, but I want to go ahead and write this. The very last line of the cash flow statement says cash at the end of the year. So what you'll do is you'll look at this year's balance sheet to get your end of the year cash amount, and that goes at the very bottom of the cash flow statement. Then one line up, you'll see that you need to put the cash at the beginning of the year. That'll go next. What you're going to do is you're going to take the cash at the end of the year and subtract out the cash at the beginning of the year to find out, is there an increase, and I'll put here, or decrease in cash for the year. This is the answer to your cash flow statement. It's the only financial statement where you know the answer before you ever begin to make the financial statement, okay? This financial statement, cash flows, is the newest financial statement. It was created after the other ones because investors and bankers started looking at the financial statements and they said, well, we really want to know about cash. I mean, it's great to know that you made a net income, but really, how much cash do you have? How much cash did you have coming in, and how much cash did you have going out? So a new financial statement was created called the Statement of Cash Flows. And so you already see the last three lines of the financial statement where it's talking about cash. You have to memorize this. Then we're going to go from the top down to discuss the rest of the statement. This cash flow statement is going to be divided into three sections. The first section is called cash flow from operating activities. And operating activities are the way that you normally make money in your business. Okay, and so if you think about that very first financial statement that we created, the income statement, well, that's talking about all your revenues and all your expenses and your net income. So that gives you a pretty good idea of how you performed in your operating activities. We spent a lot of time creating the income statement. So what we're going to do here is we're going to start out in this section, cash flows from operating activities, by writing our net income. Okay, you can find that information from the income statement. Okay, so you're going to write down the net income for that current year. And you're always going to start with net income, so that's another thing. And I'm just going to star the things that you need to memorize up front about this statement. So you need to know that cash flows from operating activities is the first category, and it starts out by listing net income. Then what you're going to do is you're going to think about all the different non-cash revenues and your non-cash expenses, because we need to take those out of net income because they didn't increase or decrease cash. So the first thing we're going to look at is, and you see this from your book, is depreciation. What you're going to do is you're going to add any depreciation or amortization. Those are non-cash expenses, so they didn't bring in any cash. And so what we're going to do is we're going to add that back to net income, because even though they were expenses, they were non-cash expenses. And so we're going to add those back. Then what we're going to do is if there was a gain on the income statement, we're going to subtract any gain, or we'll add any losses that we reported on the income statement. We'll add that back to the cash balance. Then what we're going to do is we're going to look at any changes in current assets and liabilities. And we've got to evaluate those individually to figure out if there was a positive cash flow because of that change, or if there was a negative cash flow because of that change. And we'll talk about those changes in class, and the chapter discusses each one of those changes. So once you have added back your depreciation and any amortization, you've added any losses, and you've subtracted out any gains, and then we're going to evaluate all those changes in current assets and liabilities, then you'll get the answer to the first section of the cash flow statement, and that is going to be called net cash flow from operating activities. Okay, this section up here, the cash flows from operating activities, is going to take the longest amount of time to create, and it's also the most difficult section. So you really want to pay attention when we're learning about this and when you're reading about this in the chapter, okay? Now the next section is called cash flows from investing activities. And we've talked a lot this semester about investing, and there are a couple of different ways that you can invest, and I'm just going to list those here, okay? One way that we can invest is by purchasing fixed assets. If you purchase a high dollar fixed asset, then you're investing in your business. Also, you can invest in another company, which we just called that investments. And then also you can have intangible assets like patents and copyrights. And so those, any cash that you spent or received for any of these items is going to go here. So this is going to record your cash inflows or outflows related to charges in your long-term assets. So you've got to memorize that the second section is cash flows from investing activities, and that has to do with your long-term assets. You have to know that. And so you may have some increases to cash if you sold land, or if you sold some equipment or sold some investments, you may have some increases, and you may also have some decreases in cash because maybe you bought some land or bought some equipment. So we're going to look at those long-term asset accounts and figure out your net cash flow, I'm abbreviating there, from investing activities. And that's your second section. Then the last section, and I did not leave myself much room, but it's going to be the cash flows from financing activities. Financing is how you raise money for your company. And we've talked about debt financing and equity financing in this class a lot. Debt financing is when you issue bonds, and a long-term debt like a bond, you've got to pay interest on that. So any cash inflow or outflow from long-term debt is going to go here, and equity. And equity means you're issuing stock. So any money coming in for issuing stock or any money going out to pay dividends will all be listed here under the financing section. And so I'm going to draw a little line here, but our subtotal there is going to be cash flows, net cash flows from financing. And what you're going to do is all the increases and decreases to cash, you'll add those up here. And then that will give you the net cash flows from financing activities. Then we've got to check the statement to see if it balances. So we will add the net cash flows from operating activities. Now, if your operating activities brought in more cash than you spent, that's going to be a positive number. But it could also be a negative number. And then you have net cash flows from investing activities, which could be a positive number or a negative number, but you're going to add those together. And then you're going to add the third section, which is net cash flows from financing activities. And once you get the total amount from those three numbers, it should equal the net increase or decrease in cash. That's all there is to this statement of cash flows. Please learn the things that I have starred. I'm looking now, I need to star this. You need to know the name of the second section and the name of the third section for cash flows. Please read your chapter and be prepared to work through a cash flow statement in class next week.